And good evening, everybody. This is Michael Filighera. I am with LogicalSignals.com and TradersHelpingTraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Tuesday, September 14th, 2021. Update may be a little bit longer today, so I would appreciate if everyone just kind of hangs on and sticks with me because I've made some major changes to the Elliott count. And I want to make sure that I'm able to explain all of them. First, today, the market did initially appear like, boy, we're going to go right up to the roof and we're going to get ourselves back above the 200-day moving average and start building on this minute fifth wave. But a funny thing happened on the way to that party, that the market rejected those levels, started to come back down, and broke below what would have been the top of wave one at 15,463. That negated that possibility. So the market has now rallied, rejected twice, rallied, rejected, rallied and rejected. So that has kind of, in my mind, negated, for right now, negated the potential and the possibilities that we're going to swing around and put in a minute fifth wave up to new highs above where we have, which are at 15,708.75, or for the sake of the argument, 15,709. So right now, that level is where I am marking the completion of minute 5, minor 5, primary 5, minute 5, minor 5, intermediate 5, primary 5, and cycle 5. So that now suggests that we are going to be dropping in at least a cycle level ABC. And what we're now working through is the first small 5-wave decline. Now, I agree that, because I said it before, it was not clean, except in this particular area was a nice clean 5. This is not very clean. But again, I'm not going to have any other choice than to say, well, we're going to still count this as the completion point of 4. And, we're still going to go up because it's now getting too big compared to what it's correcting. And that's why, another reason, it's like, when you're studying Elliott and you're exercising in Elliott, you have to really take a look and say, does it have the correct look, right? Does it have the correct characteristics? And if this is a corrective wave, the only characteristic it has, it does appear to be more corrective than anything else. And that was until it broke to a new low today. Because it changes everything of how we're counting. It changes the degree. And if I have to change the degree, then it's no longer really just correcting a minute third wave. It's correcting something much bigger. And that was another reason. Now, I'm human. If this turns itself around and the market decides, the hell with you, Michael, we're taking this up to the moon and we're going to go to 15,800. Well, I will come back and I will admit, it's like, yep, I was wrong, and put in the correct, what the market is telling me. But right now, that's not what the market is telling me. The market is continuing to point to weakness. And one other factor is, if I'm going to go out, I'm going to take a look at that daily chart. I'm going to have to open it up a little bit so we can see inside of it. Okay. It actually did close below or right on that 20 moving average. And that starts to show weakness in the market. Now, continued decline, that's what we'd be looking for. But with this weakness, that's where I'm looking for it to go. 15,082. Now, somebody might say, wow, that's so far, but in the scope of things, it truly is not. This is the level where I think that it eventually is going to end up to complete this first larger 5 waves down. I think it's going to end up down here at 14,710, which is the bottom of minor wave 4. So having said that, what does it say for what's going to be happening? I think we're going to be seeing some stronger points of weakness where the market is going to be moving very sharply lower. But I also still believe that the rallies are going to be just as intense. This was a pretty strong rally this morning. And if you were there and you were participating, it was like, wow, get out of the way. We're buying it, we're buying it, we're buying it, we're buying it, we're buying it. And that was all on the CPI number. You know, computers get a hold of the news and this is what the reaction is, but it was rejected. It was massively rejected. Now, what held the market up into these types of rallies? Well, for one reason, one of the components of the NASDAQ did very well today, and that was Microsoft. Microsoft, Google, you know, it started to pull a lot of the stocks higher, and they were all in the green until it was rejected. And then it had no choice. Now, Microsoft stayed higher for the balance of the day, but based on what? Based on Morgan Stanley putting out a buy recommendation saying that they've adjusted their target up to 321, I think it was, from 305. Boom, everybody needed to move back into Microsoft. Is that going to end simply because the market's going to turn and go down? No, because analysts continue to do what they do. But it's not, I don't believe it's going to stop the end result, and that is market weakness and lower prices. But it is going to produce beautiful rallies. And so that's also my point. This market is not going to go straight down. We're going to have some pretty strong declines, but there are going to be also very tradable and good rallies. And don't forget that once we're done with the 5 waves down, I'm now looking for 3 waves up. And you're going to be able to take and put Fibonacci retracements from that high, which is the start of wave 1 down, to wherever it bottoms. And then I'm going to be looking for 38, 50, 62% retracements in a wave 2. So there's still going to be a lot of good trading. There's still going to be a lot of upside. But the trend, in my opinion, will be confirmed down once we get this 5th wave. And in fact, you know, in the S&P, it did move to a new low below what we saw yesterday. That has not happened in the NASDAQ just yet, but I think it will. It went down and no, not quite, about 2 points, but I think we'll get there. And it may happen overnight. And in fact, it might put in the balance of the decline in terms of the 5th wave during drawbacks. We'll wait and see. But right now, I am suggesting that the market has changed the trend. And hopefully I'm not early or just barking off a wrong tree. So, but tomorrow, I think we see continued weakness. Rallies should be held to moving averages. You'll be able to run Fibonacci retracements from high to lows to see where things can retrace back to. But right now, until this 5th wave is complete, I would suggest that the rallies would be shallow. Now, again, from 44 to 54.01, yeah, that's a pretty decent rally. You don't want to sit it out with a short position. So that's kind of what I mean. There's still going to be plenty of trading opportunities to be able to trade in both directions. And that will continue. And that's what we do in the trade room. And so therefore, if you're really looking for a place where you can trade and with other people that are focused more on what's happening intraday and catching these moves, then you might be interested in joining the Logical Signals Trade Room. And I am running good promo prices right now. So if that is an interest, now might be the time to come in and take a look. At least, you can come in for a month and it doesn't really cost you all that much. But here's the deal. Within the trade room, we are trading off of our 5-minute charts and lower. And so within those charts, you're getting to be able to catch this move. And why? Because we try to remain focused on what's happening in front of us. You've heard me say so many times, trade what is in front of you, not what has already happened or what we think may happen. Once you project, you're moving out of the what's in front of you and you're over in a time frame that hasn't happened yet, or you're basing it on something that maybe is not what's in front of you. For example, if you're saying, well, Michael's been shouting that the market's changed direction and the trend is down, so you're going to want to be short. Well, why would you when your price action is telling you it's not going to go down right now? So why sit short from, say, 353 as the market is sailing up through 380? That's a lot of money. I'm going to close the short. I'm going to pay attention to what the bars are telling me and what the price action is telling me, and I'm going to get long. And then I'm going to follow it because now it's breaking above my moving averages and they're guiding the trade all the way up. So that's what I mean about being in the trade room. Being able to participate and to know when to flip and when not to flip, and how to stay in focus with what the market is actually doing. And so again, for tomorrow, I think that we might see a little bit more upside. I'm not sure, because I see that in the after hours, the market has started to work its way back down. If it's not held by the 20, it starts to break that 20, this again on the 5-minute chart, then I'm going to look for lower levels. Now, this is a pretty strong rally, so we may get A, B, C, and it could end up all the way back up here. I'm not necessarily counting on that, but from this level, I can count 1, 2, 3, 4, 5. So right off the bat, you can run some retracements that are showing you, oops, sorry about that. There you go. 382 is kind of right where it went to. 50% retracement just brings it up to that 200. Those are all possible. So again, being able to use Fibonacci, these are things we do in the trade room. So again, I'm going to leave it there. I do think we have additional weakness. I do think we make a new low below this before all is said and done. And I'll leave it there. The next update will be Wednesday the 15th.